Hello and welcome to traders and investors. Today is April 30 and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. EURUSD closed last week above the level of 1.0900, thus reflecting bullish sentiment among traders. On the 4-hour chart, the RSI technical indicator is hovering in the upper area, which suggests that the euro may rise further. On the same chart, the alligator's MAs are headed upwards, which reflects the quotes movement. Keeping the price above the level of 1.0900 may lead to an increase in the volume of long positions. In this scenario, the euro could move towards the resistance level of 1.1000. As for the alternative scenario based on signs of overbought conditions in the short term, coupled with a resistance level of 1.0900, the price could remain stagnant or even retreat. The complex indicator analysis unveiled that in the short-term and intraday periods, indicators are providing an upward signal. There are pivot points as a lifestyle. Evangelos Paulakis explains how to trade GBPUSD currency pair.
Last week, the pair entered the monthly cloud. As a result, now the bulls have to consolidate within the cloud and move towards its upper boundary, 1.3092. For the bears, the most important reference point right now is also the boundary of the monthly cloud, but the lower one, 1.2892. The market's figure progress will be determined by the interaction with the boundaries of the cloud and the ability of either side to overcome them, thereby securing a position either in the bullish or bearish territory relative to the monthly cloud. The bulls currently have the main advantage on the lower timeframes. If GBPUSD continues to rise, they will encounter resistance at the classic pivot levels of 1.3015, 1.3046, and 1.3103. If the bulls lose the current support of the central pivot level, 1.2958, the opening may begin to develop quite a deep downward correction, with the main target being the weekly long-term trend, 1.2865. This level is responsible for the current balance of power. A breakthrough and reversal of the trend can serve as a basis for a more prolonged and significant increase in the bearish bias.
Let's trade with the MACD indicator. It's time for USDJPY currency pair. Jakub Novak presents.
Late last week, the Bank of Japan data suggested Japan may have spent up to 3.5 trillion yen in its most recent intervention in the foreign exchange market. On Friday, the price settled below the Kijun-sen indicator line. It's a blue line on the graphic. The modern oscillator has consolidated in the downtrend territory. The dollar could reach 155.75, but the price is still above the balance line, the red line on the graphic. A drop below this mark will bring back a stable decline, but for now,
the market needs to cool down a bit and consolidate at the current levels. The price and the oscillator has formed a convergence on the 4-hour chart. This is likely the technical reason for today's consolidation, especially since it's a national holiday in Japan. If the price breaks Friday's low of 157.39, it will fuel the bears to furthermore towards the target level of 155.75.
That's all for today. See you online soon.